The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We are going to have Bill Chapman as our guest, Trend Reaction. He's got something special for us, a really cool, and I do mean cool, PowerPoint presentation. Anyway, we'll see that at 9:30. We're hoping to have our good friend Chris Paul later on, Dr. David Paul, not Chris Paul, he plays for the David Paul from the UK will be our guest, hopefully on Thursday or Friday. He's trying to clear his schedule to do that. And tomorrow we have Tim Bost of Financial Cycles Weekly will be our guest. So that's what we have looking forward to us this week. Now let's take a look at a couple of stocks that I really think that this is really amazing, folks. I don't get excited about this stuff too well. I do too. But let's take a look here. I want to show you the chart of Facebook. Folks, look at this. Going back over the last year and a half, you've got a double 1.618 expansion going back from July of 2018, and also the 1.618 from 2020. It also has a three drive to a top pattern, and it also has a beautiful ABCD, all ending at around 278, which was the high. And on top of that, you have a shooting star, a candle. That is a pretty negative group. That what's good about this is if it gets above 280, you're flat out wrong. I think we closed at 268 on Friday. I don't know where we're trading right now, but this were pork bellies or something like that, I'd be all over this. But since I don't trade stocks, I just wanted to bring it to your attention because this has a whole lot of harmony in it. And that 1.618 number is very, very important, as we've seen before. However, we have to remember, and let's remember this. You'll remember the 1.61. Uh-oh, shut up. Hold on, Larry. We got a problem. Did something wrong here. Just a second here. Shut the front door. There we go. You remember the 1.618 we had at 399 in Apple. Look how we gapped above that, and we went all the way up to 260. And I believe that could possibly be a 1.27 expansion of the CD leg. But these markets are going straight up, so I don't know. That Facebook one looks really, really interesting. Now, since we're talking about some of these, let's look at Netflix here. Netflix is one of the weaker, and let me try to explain why. You'll notice that after we had the ABCD pattern at 566, and we went to 572, we broke down to 463, and we've rallied up to a 382 retracement, and that's not looking very good. We had a big move down Friday. Whether that continues or not, I don't know, but that's a bearish pattern. So of all the FANG stocks, that's the one that looks the worst. Now Microsoft on the weekly chart has made a higher high on the weekly basis, and then also had a shooting star pattern. As you can see up there, we had the higher high and the closing in the lower part of the range. So whether that is indicative of what's going to be happening or not this week, I don't know, but that's what we're watching today. So for what it's worth, those are the 2 cents worth that I'm looking at for today. Google doesn't really show very much, but it is had a little bit of a 5-day retracement up to the 50% level. So some of these FANG stocks are a little less, but my goodness, everything is related to technical stuff. This morning on Bloomberg, a young man came on and he said, if you're not in the technical side of the stock market, you're not in the stock market. And, he is probably right. So let's review this. Now, I've had a little bit of a data problem, so I'm going to use this time frame to talk about something that we've been doing. And this is the trade that we put here on the soybean oil last week at 31.60. We went short at the ABCD level at 31.60, and today We have reached a very important level here. We've been in this for 5 days, and we're due for a nice little bounce. So what we decided to do was to take the profits in that soybean oil trade for two reasons. One of the reasons is we lost $200 in the wheat trade that looks so beautiful, but this one here makes $600, so you're net up $400, and that's the whole key, is to try to be profitable on these trades as you walk through these. Now, if you have any questions, folks, it's 877-927-6648. Currently, the board is full, but if you'll wait a little bit and try to get in, you'll probably able to reach Al, and we'll be able to answer your questions, and we will have Bill Chapman on at the break. Now, one of the things that I'm going to do tomorrow, I can't do it today because I don't have that much time, but I'm going to review a chart like this. This is basically the chart that of the NASDAQ going over the last 3 months. As you can see, just an hourly chart. And what I'm going to do, I've had a request to say, how did I start out back in the late 60s and early 70s? How did I start out and made that money that I made? And I'm going to go through and I'm going to show you basically how I did it. And it will revolve around something like this, and then I will bring this all together. This will be the culmination of the stocks, but this happens to be the NASDAQ. I'm going to use it because it's the easiest. I've got it all ready to go, but I want to show you how I use the cycles from Cyclotech and the work from Jim Hurst from the Profit Magic of Stock Transaction Timing, the stuff I learned from John Hill, and how I put it together and how I used it over that 3 or 4 year period. And then someone asked that same question in the email was, do you continue to use it to this day? Not so much, because I don't position trade. I'm basically looking for really nice patterns that set up where I don't have to risk very much. And then I move on to the next one. I know position trading can be very profitable, but it can also be very frustrating. And all I'm doing is just trying to, I look at myself as a merchant here. Some days I have cotton to sell. Some days I have butter to buy, whatever it happens to be. It doesn't make any difference. Like today, we're covering the soybean oil. And the other one that we were looking at is the gold market is beginning to look a little bit toppy up in here, folks, because unless we get above the 2055 level pretty soon here, this is going to be probably the first part of a correction in the gold market. So, and believe me, we want to be ready to buy that when we get it. I don't know when it's going to happen and if it's going to happen, but we've come down quite hard on the first break. Last week we hit 2090 and change. We got down to 2022 on Friday. There's your Harmonic down there, right there at $64, $32 the Harmonic number, 2 times that is 64. But the problem is, since that time, we've hardly been able to rally. And the same thing is true in silver, and we've made some major pattern completions, in the platinum market. So that's an important thing to remember too. Even though platinum is the follower here, it still acts pretty good. So we'll be right back after the break here. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, let's take a look at the 4-hour chart in the gold market. This is Christmas gold, the December contract. You'll notice we made the high up there at 290. Actually, it was 289 and 0.20. We dropped $64 an ounce right down to 2024. And so that held so far. And over the last few hours, starting with the late action on Friday and then all night Sunday, we have not made the 38.2% retracement as of yet. And this is unusual because usually this market has taken off right away after making a sharp bottom, but this has not happened this time. The key thing to pay attention to from a perspective of Fibonacci ratios is to watch that 2050 level. If we get above that, then all things have changed. We got a caller on the line from Michigan. Gary, what can I do for you?
Hi, Larry, and I just love your show and love you. I love the stories too. I'm just real quick. You had talked briefly about a Chinese crypto, and I went back through all your shows last week, except I still missed it. I thought it was at the end of one of the shows, and I was getting into cryptos, and I wanted to research that one. Do you remember that one? Where you're talking about?
Oh yes, I have quite a few people that are in that, and we were buying it at 6 cents, and it's right now I think it's about 18 cents. But here is, I'll put it up here so you can take a look at it. But you'll be able to see it on the show when you get up here. 1 second here. It's the name of it is Cardano, CARDANO, and the symbol is ADA. And the story behind this and why it looks interesting is the gentleman that runs this, Charles Hoskinson, was the man who ran Ethereum. And Ethereum sells for almost $400 a share, and he left Ethereum to do this. And it's got a special function as a cryptocurrency because it has so many what do you call it, iterations per second that it can handle. I mean, it's way above everything else. But it's still in the developmental stage, so it could be zero. But if it goes, it could really be a big one. And if you buy it for 18 cents, you could buy 2 shares and you still haven't spent a half $1. So I don't know. That's right. All I'm saying. That's the name of it. It's Cardano, and it is in Hong Kong, and it's viable. They have a lot of people. They got 20 people over there working, and people are looking at. Hey, just let me show you how important it is. If you take a look at this last one here, I think it's on here. Is it quite? Well, this is the one from last week, but it's in the top 10 now. Now, if you notice here, they were up to 7 here, Litecoin being the last. Well, Cardano is just below there. It's around 9 or 10 of the top 100 currencies. And so it's got a real chance. So I don't know. Yeah, I think it's worth a look. See if you like that. I think blockchains and cryptocurrencies are here to stay. We've got Bitcoin is trading above 11,000 now. I mean, it wouldn't even back off the last time. Whether that has anything to do with the gold market, I have no idea. But it just closed above the Bitcoin just closed above the 78% level at 12,000 here. And remember, they said this was going to be a bubble. Do you remember this, Gary, way back in January of 2018 when it was trading at 19,000?
Yep.
Well,
yep.
Bubbles.
I remember when it was trading for 1,000.
Yeah, that's right. Well, bubbles don't go from 19,000 to 3,000 and come back to 12,000. So it's not a bubble. So I really believe some of these things are getting ready to move pretty good. But that's my opinion. Of course, it's worth exactly 2 cents. So that's what I think. I hope that answers your question. But I'm sure that's the only one, because I only know 2, Bitcoin and ADA, which is Cardano.
Got it. Thank you so much for your time, and but your everything you say is worth a lot more than 2 cents. It's worth millions. Thank you so much.
Listen, I'll get that check out to you as soon as I can. Okay.
Be well.
All right. Hey, thanks a lot, Gary. Thanks for calling in. Okay, let's move on, folks, to the next one here before we have Bill Chapman coming on as our guest. There's a couple others that I think are important that Rich Anderson sent us, and this is just related to what do you call valuations, I guess. But hold on, that's not the one I wanted to see. Just get the right one up here. This is the one right here. This shows the relationship of earnings to where the stock market is as opposed to a ratio. And you'll notice that we are up near areas that we haven't seen in a very, very long time, going all the way back to the 2015 and also back in the dot-com bubble area. So whether these earnings things mean anything or not, I don't know. But folks, there's no question to say that we do live in interesting times. I don't know what's going to happen. I've had 3 emails over the weekend asking me if I've heard about anything about a big announcement that is coming. I've had 3 of these come in from pretty smart people, and I frankly think that I don't know anything about that. I'm the last person to know, but just looking at some of these charts, I mean, just looking at the price of silver would scare anybody about being buried something, because silver went from $11.99 to almost $30 without stopping. I mean, that was a tremendous move that we had in silver, and that's not to be taken lightly. That maybe it's the beginning of hyperinflation, or I don't know, but I've noticed in the store these last few days that prices are way up. I mean, the price of beef is going through the roof, and some of the other stuff is getting the same way too. I mean, even McDonald's raised the price of ice 30 cents, and that is. That's one of my treats. I love McDonald's ice. Anyway, that's neither here nor there. So we'll see what's going on here. Okay. Oh, someone's got a question here. Peter Borst says, if math is correct, the bottom 4 in the stocks could go to 0. I like Peter Borst very much. He worked with Paul Tudor Jones for a few years, well, quite a few years at the beginning, and I got to meet him back in 1988, and he's a really nice fellow, and I went out on his own. I don't know where he is right now, but I get an email from him but once every 6 months, but I haven't heard from him lately. He's a really nice fellow. Okay, any other questions that we have? No questions coming in, so I wanted to do one other thing before Bill Chapman comes on, and that is to remember, folks, that we could have a really severe correction in the price of gold at any time. Remember, this was back in 1978. We had gold doubled in price, almost doubled in price, and then gave 78% of it back over a month period. If we get something like that happening, and believe me, I hate to use the word hope, but that's what my feeling is that we would get a nice move down to probably the 1850 level in gold. That's down about $250 an ounce from the high, and that's not very much when you've moved that much, folks. That's not even that's just barely a 38% of retracement. But this silver market is very, very powerful, and this gold is very, very powerful. And just look what Bitcoin's doing. That's powerful too. We'll be right back with Bill Chapman, folks.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I hope we have Bill Chapman of Trend Reaction on the line. Bill, are you there?
Yeah, I'm here, Larry. Good morning. How are you today?
Good morning. They're ready to have you post your PowerPoint so we could get started.
Yeah, I'm just pulling that down right now.
Did you get over those big storms you had out there?
Yes, we did.
Good.
Hopefully you can see that, Larry.
I don't think we can. I'll ask Al. Al, are we able to see this? I don't see it coming through on Skype, I guess, correct?
Yeah, I am on Skype.
Okay, hopefully it'll come up here, and we'll get up here and running here. If you folks have any questions for TFNN, myself, or Bill, it's 877-927-6648. Be happy to answer it for you. We got the stocks are probably going to be strong again today. So how are we looking at? Yep, there we go. We got the stocks moving up to 1351, moving strongly, and we've had a high overnight in the S&P at 3356, I believe, taking out those old highs. Even the Dow Jones made a higher high than previously. We got above 27,467 in the Dow Jones, so that was a big one. So it's very interesting to see how that thing actually worked last night. So that's a good one. Okay, any luck yet on the overlay? Not yet. Wish we had that thing.
Here we go.
Okay, hopefully this will be up and folks will be able to see it. Let me know if it's working, Al. Please get me, because I don't see anything as of yet. He said he's almost there, so we've got another minute or so, and we'll try to get it taken care of.
Turn the audio on. Switch the screen.
This is going to be an automatic PowerPoint. Is that what it is? Don't see it yet. Oh, boy. Okay, see what's going on here. All right, we lost the connection for Bill, so that's not a good sign to start out with. So hopefully we'll get back on here in just a little bit, and if he calls back, we'll be able to look at it. But I wanted to share with you folks, because this is the one that I'm watching very closely as far as the retracement in the gold market. I've already had two questions about it. The reason why I'm looking at a 200-point drop in gold is we had the same thing happen into March 23rd. If you'll remember, we went from 1750. Well, we saw $275. We dropped from 1750 down to 1475, and then of course we went higher. But we're accelerating as we go. The only thing negative, and I'm not even sure if it's negative, is the fact that open interest in gold is not increasing. But as Tom O'Brien has pointed out, because of the ETFs in gold, the GLD, it certainly makes it look like the market could have doesn't really pay attention to the physical aspects of that gold. I've always looked at that because it's always been indicative of a major turn. And for the last 5 days last week, we saw the market drop in open interest. It didn't drop in open interest in the silver. The silver remained the same, but it was very minuscule, usually just 1,000 to 500 contracts on the plus, but at least was on the plus side. So I think that's important that we remind ourselves of that. So that's what we're paying attention to here this morning. Okay, let's move on here to one other thing that I wanted to mention about that gold market. I want to get it up here because we're almost there right now, folks. We're almost at this level that we were talking about in the gold. And hold on, I'll cover natural gas just a second, Bob. There's the gold that's 2049. I think we're at 2048 right now. This is going to be really important because if we don't get above that, that's going to tell us, pretty much where we are. Now let's get over to natural gas for our friend Bob. And we hit 228 last night, 229 folks in the natural gas, and I believe we backed off a little bit, but I still think we're heading up here to that 239 level. If you get a nice break in here of about 10, 15 cents, say down to about the $2 level, I think that would be a really good spot to take a look at it. Watch for the retracement off of that low we had at 179. That's where the 382 came in, and then we had the explosion that popped out of there. You can see once it went above point C, it was off to the races, and I think that's pretty much what we're looking at here. So it looks like, oh, here we go. I think we're ready, Bill. Are you there? Are you back?
Yeah, I'm still here.
Okay, go ahead. Fire away.
Not my favorite subject.
That's all right. If you're ready to go, go ahead.
Absolutely. Because we've gotten to a point in this economy right now, and also within the market, that I wanted to do a little recap.
It said
I wanted to do a little recap on what I've said previously, and this was from the February 28th presentation that when I was on.
AM call. It said, despite an overnight low of 30.59, none of my bottom indicators have come to life. What's interesting is that my crash indicators have started to signal. Pay attention here. Yesterday was a pay attention day, plus or minus 2 days. The crash indicators are signaling a market collapse between now and March 3 to 5th.
Yep.
The new forecast for a bottom in the ES is in or about 29.37 level. Below that, 27.11.
Okay, now that was on February 28th, and sure enough, I was
on my AM call. It said,
I was absolutely too conservative in that run. We have, by my calculations from yesterday, this is the presentation from the 9th of April. We have, by my calculations from yesterday, we have 711 points on upside in this market. We've got to get through the level of 30.69, and if we can clear that, 34.11 is next.
That'd be a new high.
That's going to be a new high, and we're still trending higher. And we've seen the devaluation of the dollar. The dollar is now very cheap overseas. We're still flooding the markets with money, and a tremendous amount is coming over to seas right now because stocks are just they're on a fire sale compared to the other currencies.
Well, hey, stay with us, Bill. We'll be right back.
Take your
okay.
Commercial break.
Okay.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, folks, we're back with Bill Chapman. You want to continue, Bill?
Yeah, absolutely. So this is when I was saying we were going to be headed. We were right in here in the marketplace when I was saying we were headed to 34.11. And we're currently at 33.51.28. We're in striking distance of that target, and we reevaluate it once we get beyond that 34.11 point. Let's see where we go from there. One of the things that I wanted to point out, you talk about the Fed, and the Fed has been given Congress has allocated $5.8 trillion to the Fed to use in order to overcome this economic downturn that we are in. And when you look at this face on this guy, I mean, this is the face of determination. And this is the face of a man who's determined not to have his legacy, the collapse of the American economy, under his watch. Out of the $5.8 trillion that they've spent so far, they've only used $2.2 trillion. So they have $3.6 trillion to go. And this guy is going to use it. What I thought was interesting was his last press conference, because he slipped. He slipped up, and he went and revealed what they're up to.
The last thing I'll say is that if the expansion, even if the reopening goes well, the
expansion. They're working on an expansionary policy within this economy. And they're going to throw as much of that capital that they have at their resources right into the economy if anything turns down. So what I was interested in seeing, everyone's saying, okay, what has happened with the monetary base? Well, they've increased it by 52.7%. And within that, you had 12.6% went to currency in circulation. So that's money out there in M1, M2. But you had 117.2% of the money go into excess reserves of depository institutions. And you're wondering where inflation is? There isn't going to be any inflation because the banks are holding the majority of the money from the excess that the Fed has put out there. The other thing that has happened is that the velocity of M2 is down 24.6%. Everybody has stopped spending. You're seeing on foods, inflation on foods and on McDonald's, and yet at the same time, the broader indicators are showing that there's no inflation in the economy. This is the CPI, and the CPI has gone relatively flat. Of course, that's ex-food and energy. But the one thing that you're really seeing spikes in is food prices. So it's out there. Inflation is out there, but it's a shadow inflation that's running through the economy. Here you have your monetary base, the blue line, the excess reserves, the currency in circulation, and the velocity of money. And currently, the banks have all the cash. And it's when you see this drop dramatically and the banks start throwing this money into currency in circulation, that's when inflation is really going to take off. But for right now, they're holding it at bay. And if in terms of how much money they are actually holding, we started February with a monetary base of 3.01 trillion, and it's now $52 trillion. So we've gone from a minus 0.09 excess reserves to 117 trillion in excess reserves. Mm-hmm. So we've doubled the monetary base, but the question now is, what happens next? Where do we go from here? And it's a great question. You know, I've been looking at the skew and the VIX, and there's been a flattening in the skew recently, illustrating that no one is paying up for longer-term options. That's a lack of faith in the market going to climb any higher. And if the market continues this ascent, and the skew, which has already started to deviate, you get this dislocation, and the VIX begins to rise, be on the lookout for a market correction. The other thing that I've been looking at here is, where is the money flowing? You want to be aware of, the first money in and out of the market is the most speculative money. And one of the most speculative indices is biotech, because you never know whether a drug is going to be approved by the FDA or not. And once it is approved by the FDA, the drug company has to go into its costliest part of its life cycle, and that is ramp up production and hire the people and get the sales force together. And that's why you usually see these drug stocks that get a brand new drug, cure for cancer, it pounds up 30, 40 points, and then in a week it's back down to where it started. Yeah, because they've got to take all the revenue that they're holding on the sidelines and go for a credit line in order to get this drug to market. The transports have still been rising, and this is the engine. This is the engine of the S&P. If the transports are going up, this is the fuel for the S&P to go even higher. But what is also striking is the utilities. Everybody's fleeing to safety, and the water companies, the electric companies, etc. They'll always get paid. Plus, you can get a nice dividend out of them if you try hard enough.
So you don't see any correction coming for months?
No. This is the other now. I'm glad you mentioned that, because we are in a topping process here. As you see, the biotechs having come in, that's the speculative money leaving the marketplace. Transport's still, it's a very fickle lady, transports. Mm-hmm. This could very easily turn itself right around. But this is what's striking the utilities, money moving into the utilities, most conservative of investments out there. So I use a roadmap based on the Delta phenomena, Wells Wilder and Jim Sloman. And what I'm looking at right now is the last blue year. The cycles are red, blue, yellow, and green. And
we got to take a break here, Bill. I'll be right back with you, okay? Bill Chapman, Trend Reaction. We'll be right back, folks.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back with Bill Chapman. Bill, I have a question, and that is, we've only got about 2 minutes. Do you think you could wind it up and also, give a little promo for yourself?
Absolutely. Let's go.
Go ahead.
So I have the chart here. My roadmap for this year is the industrials from 2012. We're currently just about peaking in the 2012 cycle, and we should be headed down further. What is interesting, what we're going to be heading into, of course, is the election. And you got a choice between two guys. You've got a choice between a guy who you choose. There are some who say that we got a choice between a madman who conveniently forgets anything he's done wrong, or by appearances, a demented man who simply can't remember anything he's done wrong. So it's your choice. But what I really thought was interesting was this guy, Mike DeWine. I'd never seen anybody happier for getting tested positive for COVID-19. But that was all a ploy so that he didn't have to get his picture taken with President Trump. So I run a daily newsletter out called the AM Call, and you can find it on trendreaction.com. And it's a daily trading forecast that my clients get an hour before the market opens. And with it, this is today's. And one of the things I noticed in the Wall Street Journal today is that the economy is slowing. And this is where you start to get the roll. And what I think is going to happen with this economy and with these markets is that it's just going to be a slow decline. It's not going to be one of these crashes that that everyone's expecting. Market's going to collapse beyond belief. It's not going to happen that way. It's going to fall like a souffle, like the slow leak in your tire. I could be absolutely wrong, but that's the way I'm reading the tea leaves right now. So, please, you want to get a hold of me?
Okay. Go ahead.
Trendreaction.com.
Thank you. Thanks, Bill. See you folks tomorrow. Tim Boss is our guest.